Good day, traders. Stacy Burke from Stacy Burke Trading. Today talking about one of the best playbook trade setups that I use called the First Bar Trade. This trade setup showed up on both the US and the Asian session this morning. We'll take a look at some of the parameters that set that up. Showed up also on Europe London Open yesterday. And obviously yesterday, an all-in day, day two trade continuation through. If we scrunch back, we've talked about the 3-day setup. Again, the previous payrolls Friday, setting up the Monday for day one, day two, day three, sideways, giving us our high-low initial balance in that Monday, Tuesday setup for last week. And then Thursday taking out the low of Monday before pulling back and then coming back up for our 3-day Friday New York reversal. Now the previous payrolls Friday's low down, the low of the week down at that 550 level. But talking about the First Bar Trade setup, it's something I look for at the beginning of each window or equities open. And yesterday we saw a second day trade continuation after the reversal on Friday. Just come back and look at that again. So Friday we had a big reversal coming back and the continuation back towards Thursday's low. Now I'm looking at a 15-minute chart. What I look for on these is the pin hammer. That's the entry for me on a First Bar Trade setup. But more importantly, what I'm looking at is my 15-minute chart for my levels. Now the pin that we see in our London session, this is a particular entry for a 15-minute First Bar Trade setup for me. The original move is down. We're in a downward continuation market. The market has moved down and gone into consolidation. I'm looking for that pin hammer at that First Bar setup at the beginning of the 12-candle window. What I'm looking for in that opportunity is when the market breaks one of the extremes of that doji pin hammer. So trading with the trend, and obviously there's an opportunity to enter in on a smaller time frame, but purely for demonstration on this, we're going to talk about the 15-minute chart, and then we'll look at the 5-minute chart to show the entries with the 5-minute bar. Now, again, talking about major round numbers, we've got 50, double zeros. We're in a downward moving market in a continuation of that move, targeting potentially the previous week's low. The First Bar opportunity for me is where I look for a pin hammer at that beginning of the equities hour. Now this particular setup came in the first bar of that 12-candle window. And when we went into the New York session, the very last bar of the first hour gave us a pin hammer on a 1, 2, 3 down after the market has come down 250, 300 pips. So our ADR is roughly 250 to 300 usually on a big day. We can get bigger days, but typically smaller days than 150 are narrow range days, and 150 to 300 is our normal day. Now, when we look at the 5-minute chart, there's two things to consider, and one is that I was looking for evidence of a low of the day being put in place. Now, once we have that potentially being put in place, then we're going to look for the First Bar entry. As opposed to the London trade, the Europe London window trade, where we're looking for the continuation in a market that has moved down and gone into consolidation, continued to fall in 3 legs, and then a 1, 2, 3, giving us the opportunity to identify a New York reversal. Now, again, looking and understanding that there is volume following this market down from that London session. So you'll notice that when that market reversed, it came back up to the high of the day for London's high of the day. But I want you to understand also that for these First Bar reversals, we want to see volume that's trapped down low. Traders shorting this market, looking for a continuation or a blow-off move, but they're the lower level shorts that are now potentially the fuel for that fast, aggressive move back up. Same thing with the consolidation. We have a market that, again, we squeeze our chart up, we can look back, we've got volume that's long off the bottom, potentially trapped already, and this is where the market will go down to hit stops, but also trap traders chasing that move down. Now we're looking at a 15-minute chart, but important to also understand you're going to be triggering 1 hour and 4 hour entries as this market continues lower. So traders on other time frames, we've already got end of day traders short at the beginning of the session. So we have multiple time frame players. And then heading into Asia today, and again we'll look at this on the 5-minute chart, evidence again of volume consolidating in a 50 pip box. Now again, this is important to understand that there's stops above and below this range. The market works up into the high before giving us a stop hunt back down below that higher level longs. Now we'll take a look at the 5-minute chart. So coming back and looking at the beginning of the Europe-London window yesterday. Now a lot of traders might be using moving averages. This is an example of a day where you will have the averages all in line with that strong all-in direction. But again, evidence in the very beginning, we see stops pinned up. We saw the 15-minute chart. But before that 15-minute bar closes, we already have the beginning of our pin hammer and engulfment reversal off of 50 for that continuation down. As soon as it breaks that, if traders were not entering in more aggressively, as soon as it breaks the low of that bull candle, you now have your 3-bar 15-minute pin hammer and your 1-bar stop off the numbers for a continuation of that move. Now, again, I talk about structure and geometry. We can measure this. These are trades that I did take. And again, targeting 2 times that expansion of that range. The timing is critical. It's important to understand the timing window is the most important thing. The second leg of that move down came at the London Open. First 5-minute bar of the London Open, and we'll just highlight that bar as well. So there's a small 25 pip pullback into that move down for a continuation, and then a stop hunt back up. So coming back to the rationale and the understanding that there's a high put in place, the market comes down in London and puts a low in place before continuing that move down. When we get to the New York session, so just coming back one more time to London, recognizing that this 2-bar reversal is a pin hammer, a bear pin hammer. When we look at the open of the equity hour, the first bar, the very first bar of the equity hour, the 5-minute bar, pin hammer after they have locked in the low of the session. This is one of my favorite trades. I look for it all the time. And in fact, I get disappointed when I don't see it, and when I do see it, sometimes I'm so excited I just can't believe that it's actually there, because this is probably one of the best trade setups that I look for. And again, you can see where the market moves aggressively right through a level, does not come back. We have volume trapped now. These traders are all underwater, and each bar, 2 5-minute bars, 10 minutes later, the market's already gone up 75 pips from where it started, and it just continues back through the high of the session. We go into London this morning, Asia, and we see the same setup. So again, we have a 50 pip box of volume in that upper 75 pip box from the high of the US session in a 3-level tier, 25 pip boxes that peters out between 75 and 25. And again, another example of a doji pin hammer at the beginning of the equities hour, the middle hour. And as soon as it breaks that, we're at 50. The market moves down for a fast 50 pip move right through the bottom of all this trap volume. So again, 3 first bar trades, 3 sessions in a row. And this is a fantastic, again, example of getting into a market and it moves quickly rather than being trading inside of all this crap and this chop. Being in the market, once the volume's been consolidated at the open, bang, 50 pips, you're done, you get off the screen, you walk away. New York, this was probably one of the best setups. I tend to look for this a lot in New York, especially with gold, when the market has made an extended down move or up move over the course of 3 sessions. So fantastic playbook trade setup. We do see these on the majors, maybe not quite as big of moves on the majors, but again, 1-bar stop, targeting asymmetrical risk reward. And we do see these. Often we'll see them on the 3-day setup. We'll see them at the high or low of the week on the Monday, Tuesday initial balance. When the same scenario, the market extends out to the higher to the low. It can happen at the beginning of any session. Some of the pairs obviously may move more in London. Some may move more in the U.S. And some of them, if they're Asian crosses, may move well in the Asian session. So hopefully you got value from that today, traders. One of my best examples that I archive, you can make your notes on it, but I'm looking for that first bar to give evidence of a pin stop hunt. In the U.S., we obviously had a low locked in consolidation, the pin hammer for the explosive move. We want to see trap volume, traders that have shorted a market down low, looking for that continuation, getting caught, or buying it up high, getting caught for that fast explosive move. Down, you're out of the market, lock in profit, and shut it down and come back later. So keep it simple, traders. Build your playbook, be archiving and looking at all the different variations of how this can present. Understand the importance of timing, the importance of trap volume, and the importance of how price behaves at these levels when the market's open. Have a great trading session, and may the markets go
Hi
well.
traders, it's Stacy Burke from Stacy Burke Trading. If you haven't done so, please head over to my website at stacyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.